Oh, this is Carolyn Williams with Neiman Marcus. Oh my goodness, this is Carolyn Williams with Money Reverse. Boy, I'm reverted back there a few years. This is Carolyn Williams with Money Reverse. Come on in, everybody. This is going to be an interesting evening. I see. Now, I have not had anything to drink or anything. I know it's Friday night. I haven't had anything to drink. My mind is just obviously other places. Carolyn Williams with Money Reverse. And we are here. First of all, happy National 401k Day, everybody. Happy National 401k Day. If you're watching this, I want you to say back to me, Happy National 401k Day. Or you could just say Happy 401k Day. This is a day that was a holiday that was created. I'm going to tell you a little bit more about it. As a matter of fact, do that right now. A holiday that was started in 96, and it's by the Profit Sharing and 401k Council of America. Just a reminder to say, check in on your retirement savings. If you are not in a retirement savings plan, then this is the time to get in, and this is the time to learn more. So what I'm doing here at Money Reverse is just giving you a week of empowering lessons that's all centered around retirement savings. So welcome. I see your greetings. Thank you for your greetings. It is National 401k Day. Again, this one day, this 1 week in September, it begins with work, which is Labor Day, and it ends with retirement, National 401k Day. So that's the way this holiday works. So it's a different day every year, but it is always the Friday that follows Labor Day every year. So now you know what it is. Let this be a reminder for you to look at your retirement savings. Now, even if you are retired, there's some things that we're going to talk about here that is for those that are retired too. When you retire, this information that I have just doesn't become null and void. It's still good for you too. And we're going to talk about that a little bit. So what we're going to talk about is our final day 4 session. What investment choices do I have? Remember those retirees? I said, there's still some things that you need to know about. So remember, this is not a savings account. It's an investment account. When you have a 401k, a 403b, an IRA, Roth or simple, traditional or Roth, traditional, SEP or simple, or rollover IRA. If you have a 457 plan, any of those plans, or TSP, which is for government workers. One of those sounded familiar to you, no matter what industry you're in, because it's the same thing, same tax benefits, but it's just a different area of the tax code depending on what type of business it is, if it's nonprofit or if it's governmental. So all of them have investment choices, and we're going to talk about some of those investment choices today. That is the premise of our day 4. So thank you so much. I see your greetings wishing me happy National 401k Day. Thank you so much. The information provided here today is for educational purposes only. Any market information that I share is purely commentary and should not be construed as investment advice, nor should the information be construed as a solicitation to buy or sell any securities of any kind. Now, what we're going to talk about today are the investment choices that you have in your retirement savings account. If you missed any of the day 1, 2, or 3 sessions, they kind of built on each other and really got down to, the biggest thing here is knowing that this is not a savings account, it's an investment account, and knowing having some expectations about your returns. What are you trying to get in from this account? And what are you doing to get those returns? So I hope those two things are just now ingrained in your mind. And if they're not, I want you to go back and watch the previous lessons. They are right here where you're watching me right now. So with that, I want to just share some things for us to understand, to have expectations and to have return expectations and desires and goals for this account. We've got to know a little bit about investing. This is the main reason that I say, I know I keep popping back, but I when I talk to you, I like to talk to you. I like to make sure you see my face when I'm talking to you. One of the main reasons that everybody needs to know something about investing. Remember how I talked about most companies today, if they offer a plan, a 401k, 403b, TSP, all of that, if they offer those, most of them have auto enroll. They're going to put you in upon the first day of your hire. Now, you can elect to get out. You can go to HR and say, I want to elect out and I don't want to save for my retirement. I'm going to just be poor when I walk away from the workforce. You can do that. But what they're banking on is nobody's going to do that. And rightfully so. It's going to be havoc on our federal government if we don't save for our retirement, because companies aren't doing it anymore. Companies used to have pensions, and that's when the company would pay for you and your family after you left the workforce, after you put in X number of years. But companies aren't doing it anymore. So, I mean, if you work for a company with a pension, please say, I work for a company with a pension. I want to know, because I may come get a job at your company. No, I probably won't. But with that, it is important that we do this. It's going to be havoc on our federal government. Now, I'm going to tell you guys, I was asking a poll day 1, 2, 3, and 4, 1, 2, and 3, saying, are you in a plan or not? Everybody that responded, 100% of you said that I am in some type of a savings plan. So, right, we got it now. If you're not in a retirement savings plan, I want you to watch the previous videos, and I hope to convince you to get excited about doing something for your future, your future and the future of your family. I'm not going to make any money if you do this, but I want you to do it because it's going to be best for your family. So I'm hoping that these sessions help energize you to do something important and good for you and your family and those that come after you down the line. And that's prepare for that day in which you won't be in the workforce, so that you have a life that is pleasing and not having to draw on all of your family to help take care of you. I mean, that's a noble thing to do. I take care of my mother, and it's an honor to do that. But I would like to think that our goal is to not have that be the de facto standard way that we live. So do something for yourself now. And you can start right now. Now, since this is an investment account and not a savings account, the key way that you're successful when you get into this plan is that you've got to have your money grow every year. We want to get you in early. Look back at day 2 where we talked about you really don't have time to wait. It's about getting your money to grow every year and leaving it there. It's not a savings account. Don't go in and get it. Now, how do we get the money to grow every year? The company sets the fund up for you, but it is really your responsibility to select your investment choices, and it's your responsibility to adjust your investment choices if you see that you're not making money every year. Now, the company will put you in something by default, but that is not their job. It is not the company's responsibility to ensure that your 401k is making money. They're going to match you dollar for dollar for most companies, and they have their own rules. But what it is invested in, they won't touch that with a 10-foot pole. I know somebody that's here let me know that they had tried to talk to individuals at their company, and even trying to talk to the financial partner that the company has, because every one of your companies has a financial partner that they work with. They worked with, Aon, they work with Fidelity Investments, they work with Vanguard, they work with Mass Mutual, they work with different companies as their financial partner. And so one individual told me they even call the financial partner trying to get some information, and they are staying away from it like a 10-foot pole of telling you what to put your money in. They will not do that. So if you're not getting any money from them, any information from them, that's the way it's built. They do not want to give you investment advice. Just like I had a disclaimer on the front of this, you have to really say, this is my responsibility. It's nobody's responsibility if I get into an investment and it doesn't make money. They're really protecting their liability so that you don't sue them saying they gave me investment advice and I lost money. So that's the whole reason that I have a disclaimer at the front of this as well. So because people will do that, they don't understand it's your responsibility. So what we're going to talk about today primarily is understanding these investment choices that you have inside your retirement savings plan. Majority of them are mutual funds. So we're going to talk about mutual funds and ETFs today. Mutual funds and ETFs. Now, when you go to look at your retirement savings plan, I do want you to find the screen where you see all of your investment choices, where you see there's probably about 40, between 15 and 40. Most companies are offering between 20 and 40 investment selections. And so with that, when you start to look at those, majority of those are going to be ETFs and mutual funds. More mutual funds, and a few may have ETFs, and some will have some index funds. I've looked at some recently with some of my clients, and there are some index funds there, which is very interesting. Now I'm going to tell you, companies are putting good investment selections in their plans. This is not, I don't want you to think that they are just putting the things that aren't good out there. I've looked at many people's retirement savings plan as a coach, helping them to pick selections that work best for them. And no matter what these companies are, they always have good investment selection. So I don't want you to think that you just got a Rudy Poot plan and the reason you're not making money is because there's just nothing out there to make money in. There's something out there that's making money. It's not necessarily about what they give you as a choice. It is about you understanding what's going on in the market so that you can put your money in the things that's making money in the market right now. That's why it's expected that you know something about investments, because you're in this account anyway. So with that, I want to say, let's go through mutual funds. What a mutual fund is, it is really a single entity. You buy one symbol, and it has a number of stocks and securities inside that one symbol. Let's suppose we wanted to talk about a mutual fund, and that mutual fund was an energy mutual fund, having things in it about energy. Instead of, if you say, okay, energy is doing well, which energy is doing well right now, instead of having to figure out which energy company to get, do you want to get ExxonMobil? Do you want to get Chevron? Do you want to get, do you want to get any of these energy companies, or do you want to get Baker Hughes, or do you want to get Schlumberger? Do you want to get the drillers? It's like, I don't even know. I just know energy is doing well. How about buying an energy mutual fund? You buy one symbol, and it's probably got every energy company that I mentioned here in there, plus some. They may have between 10 and 50 different companies in there, a fraction, just the whole fund is made up of energy companies. So this is a professionally managed group of investment choices. And they all have a particular theme, just like in this case, the theme is energy. Typically, they're low risk and low maintenance. And when I say low risk is because it's professionally managed. It's a whole lot of companies in that one symbol that you're buying, but there is a fund manager that's looking at it. If one company goes belly up and stock price starts dropping, you don't have to do anything. There's a fund manager that says, let's get him out and let's put another one in. They're doing that for you because they make money if the fund makes money. So this professional manager is making sure that the fund is positioned where it is best positioned to profit. So with that, we don't, if you buy a single stock, you got to know if that company goes belly up so that you can go trade it. But with the mutual fund, they're doing that for you. And so there is a fee that's added on the top of mutual funds. Now, you don't see the fee when you buy it. It's just all included kind of in your returns. They'll take out some type of a fee to handle all of this oversight and all of this management. Now, most of your retirement savings plans use these. Most of the things that you're going to see in your retirement savings plan as investment choices, they're mutual funds. You're not going to go with individual stocks. You're not going to be able to buy individual stocks in your 401k plan. The only stocks that you would be able to purchase in your 401k plan would be your company stock. And I don't, let me put it like this. If I worked for a company that had company stock and I was in that company's 401k plan and I am also working for that company, giving them all of my time, I get my health benefits and everything from that company, I would not put my retirement in that company. The reason is if that company starts to have problems, not only do I potentially lose my job or have a pay cut, I lose my health benefits and I lose my retirement too. Oh, no, this ain't happening. So guess what? If it were me, you can do whichever way you want. But if it were me and I was in working for a company that offered company stock, even if they gave me the stock for free, once it vested, I'd sell it and get in something else. Because I just don't want to put all my eggs in that one company basket. I just don't. And there are several companies that have gone under in past years in which that has happened. You lose your job, which means you lose your income, you lose your health insurance, and you lose your retirement. I'd like for you to have your retirement invested in something else so that even if this company goes under, those other companies that it's invested in are still doing well. So with that, though, that's the only option you're probably going to have with the company stock inside a retirement savings plan. They're going to be mutual funds. And so there's many choices of mutual funds and they each have different objectives. The sample objective that I said here was energy. So now you can have one with small cap, large cap, mid cap, big companies, small companies. You can have funds that have bonds in them. You can have mutual funds that have just cash that are treating your money like a cash equivalent. Those are money market funds. So they have different objectives. So just kind of look at the funds that you have and look at the objectives and make some good choices there. Now, ETFs. Some in retirement savings plans have ETFs, and they are exactly like a mutual fund. You buy one symbol, you get multiple companies under there. They have a particular theme. They're grouped investments. They have a fund manager. They're exactly the same. The only difference is these trade just like a stock. And so with that, you can buy one of these or buy 5 of these. With a mutual fund, you have to buy a block. You just say how much money you're going to put in. I'm going to put in, $5,000 for this mutual fund, and they'll give you however many shares they give you, but based on how much the price is at the time that they make the purchase. They make the purchase all at one time, sometime in the middle of the night, and then the next day you have your investment. Now, with the retirement savings plan, you're always going to do that. You're going to put in how much money you're going to specify how much money you want to put in that investment. But if you were doing exchange traded funds, ETFs, know that you can buy those in your regular brokerage account. If you had a side brokerage account and you wanted to go buy an ETF, you could. Sometimes with the mutual fund, depending on the makeup of that fund, you may have to have a certain amount of money to even get in a mutual fund. So just know ETFs do just like mutual funds, but they trade just like a stock. So you could buy 1 or 2 in your individual account, where with a mutual fund, you may not be able to do that. So mutual funds and ETFs. Now, I want to tell you about some other terms that now how do you determine, how does a company determine what they offer to you as investment choices? That's really a partnership between your company and the financial firm that they're partnering with. That's really their decision. So I think that all of these firms are doing a great job from the plans that I've seen. So I don't think that companies are, just offering you trash at all. I just don't think that. But each one are doing things differently. And how they negotiate that, what they offer, what the prices are, I just don't know how that works. Your individual company comes up with an agreement with that financial company, whether it's Fidelity Investments, Mass Mutual, Aon, Vanguard, T. Rowe Price, whoever they have that they're partnering with. And whoever they partner with, that's whose website you sign on to. When I was in corporate, my plan was managed by Principal, and one was managed by Wells Fargo, and then Principal, and one was managed by Fidelity Investment. So whichever financial company they partner with, that's whose website you sign on to when you go to look at your plan. But they're all different, but there's some common things. There's so many common words that I want you to know that are just common across all plans. And I want to go through just 3 of them right here, just so as you're looking at investment choices, you can know what some of these mean. If you see the word equity as a part of the name in the mutual fund, equity is a general investment term that refers to stocks. So if they say the XYZ, common equity fund, that means it's just stocks. So just substitute the word equity for stocks, because a mutual fund can have bonds, it can have treasury yields, it can have all types of things in it. You can even get funds now that have crypto in it. I know they were working on some of those. The second one, fixed income. This is a mutual fund that returns periodic payments and the eventual return of the investment principals at maturity. In other words, this is a bond. So when you see your mutual fund have the word fixed income in it, just know that that's a bond. So remember, your plan, your investment can be stocks, bonds, or cash. Fixed income is bonds. Sometimes I think I saw some that are starting to use the word bonds now, which is great. But if some of them, they're using fixed income, just know that that's bonds. Substitute those words interchangeably and you'll know what you're getting. And then target date funds. I really want you to know this one because they all have this. This is a mutual fund that's structured to auto adjust the asset allocations and align to predetermined retirement dates. Now, these are what they probably put you in default. A target date fund, you will see them listed as investment choices, and they will all have the same name. The XYZ Target Retirement 2030, XYZ Target Retirement 2035, XYZ Target Retirement 2040. These are target date funds. What they do is that number on the end, that year, the 2030, 2035, 2040, that is the year. And the way they do it is they say, assume that you're going to invest to retire that year of that fund. If you think you're going to retire in the year 2030, you would put your money in the 2030 fund. That's what they want you to do. Now, what they're going to do is the closer you get to retirement, they're going to shift you out of stocks and more into bonds. Bonds are a less risky environment. They have a less of a return. You're not going to make as much money, but you also have a less risk of losing money too, because the thought pattern is the closer you get to retirement, they want to protect your money. And so what they say is you don't have to worry about making those adjustments. Just get in one of these target date funds. And what that will do is they'll look at your retirement age. Those funds are looking at you would retire that year. So sometimes they'll call them birthday funds, and you would get in the fund that is based on the day that you were born. Target date birthday 1960, target date birthday 1965, target date birthday 1970. So they would have birthday funds, and in that case they are doing the same thing. They're calculating when you probably would retire, and the further you are away from retirement, they're going to load you up with stocks automatically. And then that is going to cause you to have a greater return, because stocks bring, and historically, stocks have brought a much larger return than bonds. And then the closer you get to retirement, they're going to turn that down, have fewer stocks and more bonds. They're going to just start adjusting your bond stocks and bonds. When you're young, stocks are high, bonds are low. So you're going to have more and more bonds the closer you get to retirement. Those are called target date funds. I would bet that any of the default investments that they put you in are target date funds. So with that, these are some terms I want you to know. And so look at the investment choices that you have and look at what you're in and look at what your returns are. Start to look also at all of those other investment choices and let's see if there's some that would better fit what you're trying to do. Okay? Now it's time for me to ask you questions. So if you have any questions, post them in the comments. If you're watching this on the replay, definitely put your questions in the replay in the comments, even if I'm not here live. So go ahead, post your questions, and I will get back to you as soon as I can. Now, I'm making these very power-packed 30-minute lessons. And again, today is National 401k Day. We have completed our 4 days for your 401k. I'm going to remove my picture so you can see the little logo there. 4 days for your 401k. We have completed each lesson. If you were here for each of the lessons, can you just say every lesson? Put every lesson in the comments. I'd love to see that. And so with that, the videos and replays are out here. If you found that this was beneficial to you and you would like to share this with others, then definitely just share out the videos. I appreciate any of you that are sharing the information, and you can also just let them know where to find it. I'm going to always keep them out here. So with that, now, I want to tell you everything that I talked about here and all of the things that I'm instructing you to do, I want to share with you. I do have coaching services that I can help you with all of this. I have 2 specific programs that I have. Let's talk about the one on the left, the retirement planning. The outcome of this engagement with me, this is a one-on-one engagement. It's not a class. The outcome of this would be you would walk away with a report that I create showing you what your money will look like in the 30 plus years after you retire. You can do this at any time. You don't have to be close to retirement age. As a matter of fact, the earlier you do this, the better, because then we can talk about your retirement investments. How much do they need to make every year to get you to this point? So we do an investing personality assessment to kind of see if you're aggressive or if you're moderate, and also so that we can set up your retirement savings so that we can say what your retirement savings need to bring back. But if you say, I don't know when I should retire, I really would like to walk away from the workforce now, but I'm not really sure, or I'd like to walk away in the next 5 years, but I just don't know if my money is going to work out. And how do I project it out for the next 30 years? This retirement planner is the way that you do that. This is such a fun engagement because this engagement, it requires a lot of input from you. It requires you to kind of think about what type of lifestyle you want to lead, and then let's put some dollar figures on that. It also requires you to look at your spending now and look at your spending the way it's going to be in retirement. So in a sense, you're putting out a futuristic financial plan for yourself so that you can say, when I move into retirement, I don't want to have a house payment. When I move into retirement, I don't want to have any of these bills. So I need to work for the next 4 to 5 years to get these things paid off. And so we will sit there and talk about that, and you will have a pretty big report. I think the last one I did was about 26 pages long, giving them all of the details that this couple was like, oh my God. And I even factor in inflation. So, and we talk about how do you take the money out of your account as well? Not saying, on retirement day, you go get it all on that day. Nope. We talk about how much you need to take out each year and how to do that. So that is the retirement planning service. On the right-hand side, the retirement savings tutor. This is where I work with you in a one-on-one engagement, looking at your retirement savings plan, your 401k, 403b, 457, TSP, IRA, traditional or Roth, SEP, or simple, or 457 plan, not the 457. Typically, we don't need this with the 457. But with that, this is where we look at your retirement savings and look at what you are looking to have done. This is where we set clear expectations of how much we want this to return for you. We go through the details of the investment choices that are available in your plan. We do investment personality assessment again, so we can know if you are conservative, aggressive, moderate, and we go through and adjust your retirement savings plan so that you can have the investment choices that best fit you. Now, with this plan, I will never sign on to your plan. You go, how is that going to happen? I'm going to ask you for a few reports, and I'm going to be with you as you make all of the changes. So this is basically tutoring you on how to manage your retirement plan. And I promise you, once you go through this, you'll be able to manage not only the one that you're in now, but if you switch companies or if you want to share with your children how to manage their retirement savings plan, you will have the knowledge to do that. So with that, the retirement savings tutor and the retirement planning, these are two services that I offer. I do often bundle this. I get with clients that want to have these bundle and do all of them at the same time. So if you are interested in any of these, here's my calling card. I'm going to ask that you take a picture of this screen, and with that QR code right there in the bottom left-hand corner of the screen, just scan that with your phone and it will bring up my calendar and allow you to schedule a 15-minute conversation with me. So I would love to sit with you and talk with you about this or any of the other services that I offer here as a financial coach, a teacher, and a speaker. There's all my credentials there, and I would love to be your financial coach. So with that, if you don't, I'm not seeing any questions from you. I'd love to see you again. Stay tuned to know other things that I have going on in Money Reverse. Would love to have you come again. And thank you so much. If you found this beneficial, good. Thank you. So good information. Thank you. It is my pleasure to serve you. And to everybody, again, happy National 401k Day. Until next year, we'll see you next time.